Hello YouTube and welcome back to YFP. Now in today's video, I'm just going to be showing you guys how to identify liquidity traps and where price usually hunts to fuel that reversal. Now, a problem that a lot of us SMT traders have, we feel sort of obliged to take mitigation to mitigation. But what if I tell you that I don't really enter a trade unless there's a high or a low that has been induced, which means taken out. Now, due to this inducement, that actual low or the high that has manipulated price becomes a very high probable zone for a true mitigation for future. Now, by identifying these areas, it will allow you guys to be able to preserve capital for high probability setups, just like these. And these positions will likely go on to be the low of the weeks and also the high of the week, or the low of the day and the high of the day. Perfect. So there's three main types of reversal liquidity that we'll be looking at today. So the first type is our previous daily highs and our previous daily lows, and the second type is our internal range liquidity, and our third is our same day externals, which is usually our Asia highs and our Asia lows. Now I'm going to be touching a lot more in depth about each one of these, and I'm going to be making future videos that combine and go hand to hand with this video. This is purely just to give you a glimpse into the way I trade, and I'm not looking for that general mitigation to mitigation. As I said, I will only enter a trade if price has manipulated or induced a high or low and then continued in the intended direction of the flow of price. Now let's pull up trading view. So on my trading view chart now, you can see that I have already marked out from our previous week trades that I actually took myself, and the community also took. Now in terms of this first one, so let's break down our previous daily low. Okay, so when we're looking at the flow of price, we can see that we are in a uptrend in this range, right? Now obviously in the higher time frames we are still bearish, right? Because we've had this shift here of price, and then price has started to pull up from that area. So from this zone here, we're no longer looking for shorts because we're not in a sort of premium array for this range. So we're seeking price to reach into a premium and then continue that shorts down. So temporarily order flow is bullish in this range, right? Now because of that, and we've identified that the order flow is bullish in this range, we are looking for our manipulations, and you might want to grab a pen and paper for this. So when we're looking for our previous daily lows to be taken out, we're obviously anticipating a bullish price delivery. So we're looking for high lows and higher highs. However, we're waiting for a higher low to be taken out before taking a trade to then take out the higher high. Now, why this works is there's probably a mixture of reasons, right? But in my own interpretation of why this works is due to the fact that there's sell stops located underneath a low, which means that, let's say a seller is trying to enter, as soon as price breaches this level and they've entered their short position, and their stops will usually be on the closest high or the swing high. So because of this, the market makers sort of breach these levels, not only to take out these sell stops, but also in terms of the smart money world, they leave traps to the upside. So now this would be a smart money trap because price just swept through it. And essentially the reason they did this is because the fact that a lot of sellers that would have been triggered here have now been also obviously identifying a buy to sell order block that gets run out, but it's all based on the flow of price. Now, why would we want to be selling from here when there's a Asia high, there's multiple highs that haven't been taken out that are stacked here, and the narrative just doesn't make sense for the sell, right? Now, if you're trading smart money concepts, this should be quite easy for you guys to grasp, in the sense that obviously we're looking for manipulations in the opposite side of order flow. Now, by identifying this, you'll be able to sort of not get caught out on buying prematurely or selling prematurely. You will have a outlook on the market wherein you can sort of frame these ideas and catch the lows of the days or highs of the days, or lows of the weeks and highs of the weeks, based on this interpretation of price. Now, moving on to the second one, which is internal range liquidity. If we drop down our time frames to a 15-minute, we can see that price has taken out this smart money trap here also, right? Now, why is that a smart money trap? Is just because we have no imbalance coming out of this area at all, right? We might have a little micro one here, but it's nothing that is showing an institutional push. Now, if we point our attention to the just below this area, we have this sell to buy that has a nice imbalance that also took out internal structure, right? So if we drag this block along, we can actually play this for a mitigation. Now, this is due to the fact that obviously price has taken out a low, right? Price has taken out this previous daily low and then shifted to higher prices. So from this area, this is where the intention was caused to then go on to break these highs to the left. Now, that's why we can play this mitigation and not look for another previous daily low to be taken out, because it's already happened. The liquidity in this area has been transferred now, right? So we can take this mitigation based on the fact that it has induced prior, and that is very important. So when we're taking mitigations to mitigation, so order block to order block, we have to see an order block that has manipulated a price point or a swing point in the market. And usually those points will be very aggressive. So we will have aggression in and we'll have aggression straight out of these zones. And that's very important, because if price starts stalling at these areas, then usually we're wrong. And that's just how the cookie crumbles sometimes, you know. This is how probabilities are in trading. You're not going to always be right 100% of the time. However, by having an edge like this in the market, where you're able to identify these different types of liquidity pools and trap areas, you'll be able to start framing ideas that you usually wouldn't have framed based on just normal mitigations to mitigations, which is quite basic smart money concept, right? Now, moving on to the third and the final area is the same day externals, which are usually going to be your Asia highs or your Asia low. Now, drawing your attention here, we can see that price has hunted a previous daily high within the Asian session, and then we've had a very aggressive sell push down. Now, by looking at this, we also have a same day internal range liquidity has been taken out into this order block here. Now, why would we mark out this order block? It's just mainly because we have an institutional push, so we have an imbalance that is left after the sell to buy has been created. So from this area now, as soon as price comes, as I said before, we'll have aggression in and aggression back out. As soon as we start seeing this, these candles that are sort of quite voluminous and they're leading to the downside, we can start framing that this would be our manipulation, right? So we have that manipulation inside of an OB, and now we need to hunt the draw of liquidity, which is going to be our Asia high, right? As you can see, as soon as the Asia high gets taken out, we see that smart money reversal taking place again, right? Now, the same thing in Asia we can frame here as well. So why did this Asia high hold? It was simply because of the fact that we took out our internal range liquidity, and this now becomes our zone that we're interested in, as it has taken out liquidity. Let me just mark the zone properly. There you go. And you can see price comes into it during Frankfurt and then again during London session. and we deliver that bearish order flow, right? So it is very important for you guys to understand that not every single move you need to take in the markets. You're waiting for moves that are high probability, which mean, has it taken out a high or low? Has it also had a shift? Have we got an order block that has imbalance? If all of these things align, then you're in the right area, you're sort of in the right process of building a solid edge, right? But don't worry guys, you guys are in the right place, because I'm going to be providing you my whole edge. I'm just touching a few foundational topics before we dive into the actual source and content of this channel. Now, if you guys enjoyed this content and enjoyed this video, please hit the like button and don't forget to subscribe. It really helps the algorithm, and obviously it gives me that motivation to keep doing this for you guys also, right? Thank you, and I will see you in the next video, guys. Peace.